Good day, doctor. We are from Group 3. Today we are going to present our topic, which is capital structure and dividend policy. And the company which our group choose is Maybank. And here is our group mates. I myself, Henny, Sally, Tan, Samantha, and Sazia.
The first part of this assignment is analysis for Maybank financial position for year 2021 and 2022. And for this part is about the short-term solvency or liquidation ratio. The current ratio, quick ratio, and cash ratio are key indicators of Maybank's short-term liquidity position. In both 2021 and 2022, the current and quick ratio remains slightly above 1.0, indicating the bank had sufficient current asset to meet its short-term obligation. While for the cash ratio, true lower remain positive and showing that Maybank still held enough cash to cover a portion of its immediate liability. Additionally, the net working capital ratio slightly declined from 0.074 to 0.071, suggesting a minor reduction in short-term liquidity cushion. Overall, the bank maintained a stable and healthy liquidity position across both years. The next part is about the long-term solvency or financial leverage ratio. The analysis of Maybank solvency and coverage ratio show a stable yet slightly more leveraged financial position in 2022 compared to 2021. The total debt ratio increased marginally from 83.3% to 84%, and the debt-to-equity ratio rise from 5 to 5.25, indicating a greater reliance on debt financing. Similarly, the equity multiplier increased, reflecting the higher financial leverage, and the long-term debt ratio showed a slightly rise, suggesting a consistent use of long-term financing. Despite this, Maybank maintains strong coverage liability, with both the time interest earned ratio and cash coverage ratio holding steady at 5 and 5.5 respectively across the both years, demonstrating the bank's continued ability to meet interest obligation comfortably. For this part is about the asset management or turnover ratio. Maybank efficiency ratio remained larger consistent between 2021 and 2022. The receivable turnover ratio stayed at 4.6 times and the day sales in receivable held steady at 79.3 days, indicating a stable performance in collecting payment from the customer. And the net working capital turnover also remained unchanged at 2.3 times, showing a consistent use of short-term resource to generate revenue. Although the fixed asset turnover slightly declined from 7.7 to 7.5 times, it is still reflected strong utilization of fixed asset. Meanwhile, the total asset turnover remained at 0.019 times, suggesting a consistent overall efficiency in generating sales from the company total asset. The last part is the profitability ratio. Maybank profitability ratio in percentage form reflect very stable performance between 2021 and 2022. The profit margin experienced a minor dip from 0.035% to 0.034%, indicating a very slight reduction in profit per ringgit of revenue. The return on asset decreased slightly from 0.000675% to 0.00058%, suggesting a minimal change in asset efficiency. On the other hand, the return on equity showed a small improvement from 0.00405% to 0.00412%, reflecting a slightly better return to shareholder. Overall, the Maybank maintained a steady profitability with only the marginal change.
Next, we will explore the capital structure of Malayan Banking Berhad, commonly known as Maybank, for the financial years 2031 and 2032. Capital structure refers to the blend of debt and equity a company used to fund its operation and growth. A stable and efficient capital structure is crucial as it influences a company's cost of capital, risk profile, and long-term growth potential. In 2021, Maybank continued to maintain a strong and efficient capital structure. These structures support the bank's legal obligation while promoting sustainable and profitable growth. Let's break it down into the two key areas, which is regulatory compliance and capital adequacy. Second, capital optimization initiative. Maybank report a common equity tier 1 CET1 capital ratio of 50.40% and a total capital ratio of 80.83%, exceeding the Bank Negara Malaysia minimum requirement. The liquidity coverage ratio stood at 136.4%, placing Maybank among the best capitalized bank in the country. Additional, Maybank is classified as a domestic systemically important bank, DSIB by BNM, requiring it to maintain higher capital buffers to ensure financial stability. As for capital optimization initiative, Maybank diversified its funding source by issuing various instruments, including USD commercial papers in multiple currency and interest structure. The bank also undertook subsidiary capital restructuring, aligning the capital mix of its overseas branches with overall group objective. Finally, it enhanced its risk-weighted asset (RWA) optimization by refining internal process and improving the accuracy of RWA calculation. In 2022, Maybank maintained its strong capital position while continuing to meet regulatory standards and support business operation. First, regulatory compliance and capital adequacy. The CET1 ratio stood at 40.78% and total capital ratio at 80.20%, both comfortably above BNM's requirement. Maybank liquidity coverage ratio increased to 145.4%, once again exceeding the 100% regulatory threshold. Second, capital optimization initiative. The bank expanded its funding base by issuing a variety of securities such as Samurai bond and USD commercial papers with both fixed and floating rates. It continued its subsidiary capital restructuring to streamline capital across the group. The RWA optimization process was further refined by enhancing internal policies and improving RWA calculation methodologies to better reflect the bank risk profile. In summary, Maybank capital structure for both 2031 and 2032 reflect a disciplined, risk-aware, and forward-looking approach. By maintaining strong capital ratio, adhering to regulatory standards, and optimizing its funding and risk-weighted asset, Maybank remains a financially resilient and strategically sound institution. Let's now take a closer look at Maybank dividend policy for financial years 2031 and 2032. A dividend policy is a company strategy for distributing profit to its shareholder. It determines how much of the earnings are paid out as dividends and how often these payments are made. This strategy balances between rewarding shareholders and reinvesting profit for future growth. In 2031, Maybank demonstrated a strong commitment to delivering returns to its shareholder. First, commitment to shareholder returns. Maybank upheld its long-term dividend payout policy of distributing 40% to 60% of its net profit to shareholder. However, for financial year 2031, it exceeded this range with an impressive payout of 84.5%, showcasing its dedication to shareholder value. Second, dividend reinvestment plan (DRP). Maybank DRP allows shareholders to reinvest their dividend into additional Maybank share. In 2031, the reinvestment rate stood at 85.7%, indicating a high value of shareholder participation and trust into the bank's future. Maybank maintained its long-term dividend policy in 2032, again showcasing strong financial performance and its commitment to investor return. First, dividend payout ratio. For financial year 2032, Maybank dividend payout ratio was 84.6%, again exceeding the long-term target of 40% to 60%. This reflected continued profitability and confidence in its financial standing. Second, dividend reinvestment plan (DRP). The DRP remained available to shareholders in 2032. They were offered the choice to either receive cash dividend or reinvestment part of their dividends into new Maybank share. This share will offer at a discount of up to 10% of the market price for the incentivizing reinvestment. Third, total dividend and yield. Maybank declared a total gross dividend of 58% per share for financial year 2032. This translated into a dividend payout of nearly 84.5% and a dividend yield of approximately 7.0%, positioning Maybank as one of the top dividend payers in the banking sector. Bank dividend policy in both 2031 and 2032 demonstrates a strong and consistent commitment to rewarding its shareholder. Through high payout ratio and attractive dividend reinvestment plan and stable financial performance, Maybank continues to reinforce investor confidence and long-term value. This practice focused on maximizing financial health, profitability, and long-term sustainability through strategies such as cost reduction, revenue enhancement, digital transformation, and improved resources allocation. In 2031, Maybank focused on a mix of digital transformation, strategic growth initiative, and sustainability to optimize performance while maintaining strong capital and liquidity position. First, digital transformation. Maybank leveraged machine learning and robotic process automation (RPA) to automate back-office functions such as credit application and remittance. To assess performance, the bank tracks straight-through processing rates and customer turnaround time, assuring the effectiveness of its digital initiative. Second, M25 plan and growth opportunities. As part of its M25 strategy plan, Maybank prioritizes financial inclusion by enabling real-time cross-border transfer and simplifying banking service for SMEs. The bank also expanded into new growth areas, including digital banking, sustainable finance, mobilizing Kit Malaysia 30.6 billion and increasing SME lending and community-based program. In 2032, Maybank built upon its digital foundation while expanding into new technologies and adopting agile methodologies to drive customer-focused outcomes. First, digital transformation. Maybank further automate back-end processes through machine learning and RPA, optimizing areas like credit processing, remittance, and trade service. A significant portion of transaction was migrated online, reducing reliance on physical branch. AI was deployed for innovative solutions such as anomaly detection in vehicle claims and implementing a fully digital Know Your Customer (KYC) system. Second, Agile at scale. The bank introduced Agile at scale principle throughout its operation to boost flexibility and accelerate value creation in a fast-changing environment. Third, customer centricity. Maybank prioritized tailored solutions designed to meet evolving customer expectations. Its strategy emphasizes being present where the customer are, reflecting a deep commitment to adaptability and personalization. To conclude, Maybank financial performance optimization strategy in 2031 and 2032 showcase a strong commitment to innovation, customer focus, and sustainable growth. Through advanced technology, strategic planning, and a customer-first mindset, Maybank continues to strengthen its financial position and deliver long-term value to stakeholders.
Now, I will continue with the profitability and earning ability. Maybank's strong and stable profitability support its ability to repay a debt and pay dividends. In 2021, it's earned 8.10 billion, rising to 8.23 billion in 2022. This consistent earning enhance investors' confidence, reduce capital costs, and support a balanced mix of a debt and equity. Next is a growth opportunity and internal financing. Maybank prefers using retained earning over external debt for a growth. For example, 1.2 billion was reinvested in 2021. This reduced resilience on borrowing, avoids interest obligation, and allows greater flexibility in responding to opportunity. The third one is a cost of debt vs equity. Debt can be cheaper due to a tax benefit but increased risk. Equity awards fixed payment but can dilute ownership. In 2021, Maybank reduced borrowing costs through smart liability management, maintaining a cost-efficient and low-risk capital structure. The fourth one is economic and market condition. External factors like inflation and interest rate also influence capital decision. So during the pandemic, Maybank adopted a conservative approach as a recovery began in 2022. It shift towards growth while managing a rising rates, showing the adaptability and resilience. Last but not least, regulatory capital requirements. Maybank adhered to Basis 3 and Bank Negara rules in CET1 ratio was 16.09 in 2021 and 15.67% in 2022 as well above the minimum required. A strong capital buffer ensure compliance, stability, and support a sustainable growth. Next, I would like to continue. Between 2021 and 2022, Maybank's capital structure was shaped by two key economic phases, which is pandemic uncertainty and post-pandemic recovery. In 2021, Maybank remained resilient, reporting 8.10 billion in profit, reducing interest expenses and maintaining a strong CET1 ratio of 16.09%. It reinvests 1.26 billion for retained earnings to support growth while avoiding more debt. In 2022, as interest rate rose, Maybank's profit grew slightly to 8.23 billion and total assets surpassed 1 trillion. The CET1 ratio stayed strong at 15.67%, reflecting a good regulatory compliance and strategy risk management. Overall, Maybank adapted well and better. Between in 2021 and 2022, Maybank made a key capital structure adjustment in response to shifting economic conditions. In 2021, during the pandemic recovery, it reinvested 1.26 billion in retained earnings and reduced the interest cost and increased dividends to 58 cents per share, helping preserve financial flexibility and maintain a strong CET ratio of 16.09%. While in 2022, despite inflation and rising interest rate, Maybank grew its asset by 16 cents, kept CET1 above 15%, and continued to manage function costs effectively. This action reflects Maybank's ability to balance the growth with a risk control while ensuring the capital aquatic and long-term resilience. That's all for me. Thank you, Doctor.
Good morning, Doctor. I'm Tan Hui An. Today I would like to present how do companies decide on their dividend policy. Company will balance profit distribution and further financial needs. Dividend decision depends on profitability, cash needs for expansion or debt repayment, and also investor expectation. First, the factor that affect how much companies pay in dividend is profitability. Companies must earn sufficient profit to pay dividends. For example, Maybank net profit in 2021 is 8.10 billion ringgit Malaysia, while in 2022 net profit is 8.23 billion ringgit Malaysia. Dividend is 58 cents per share both years. Then the cash flow Real cash is needed to pay dividends. Maybank used the DRP in 2021 and 2022 to issue shares instead of cash, conserving liquidity. Besides the further investment plan, retained earnings often fund growth projects. Maybank invested 110.9 million Malaysia in employee development and digital transformation in 2022. Fourthly is debt obligation. High debt level can lead to reduced di- dividends. Maybank's CET1 ratio in 2022 is 15.67%. It shows strong capital base enable high dividend payouts. And the last one is dividend history. Companies aim for stable or rising dividend to maintain investor confidence. Maybank pay 58 cents in each year in both year per share. The first Maybank Group example dividend policy is dividend payout history. Below is the Maybank dividend per share, total dividend payout ratio, and net profit in 2021 year and 2022 year. Next is Dividend Reinvestment Plan (DRP). By implementing DRP, Maybank made it possible for shareholders to get dividend in share rather than cash. Below show that in 2022 CET1 ratio of 15.67%. It promotes enduring investment and shareholder loyalty. Thirdly, Maybank's dividend yield in 2022 year was 6.7%, which is marginally less than its yield of 7% in 2021. In the banking sector, these yields are seen as high and alluring, indicating a high level of investor confidence. With a market valuation of 104.87 billion ringgit Malaysia in 2022, it excited Maybank in maintaining its position as one of Malaysia's most valuable corporations. What drove Maybank's dividend decision? First, strong and stable profitability. Despite a slight dip in EPS, stable earnings supported continued dividend payout. Then is strong capital position (CET1) ratio. Maybank maintained high CET1 ratio, which is 2021 year 16.09% and 2022 year 15.67%, exceeded regulatory requirement, announcing high payout ratio of our at 84%. Thirdly is Maybank use of DRP. DRP offered shareholders share instead of cash dividends. It helped preserve cash, supported lending and operation, and strengthened equity. And the last one is shareholder expectation and market confidence. Maybank has stable dividends matched investor expectation and widened negative signal. Dividend yield of 7% in 2021 year and 6.7% in 2022 year kept Maybank attractive to investors.
Next, how do companies balance their need for growth and investment with their obligation to pay dividends to shareholders? Companies must invest in future growth while providing returns to shareholders. Growth ensures long term success and competitiveness. Dividends keep investors satisfied and loyal. Number one, achieve balance through disciplined financial planning, flexible dividend policies based on earnings, smart capital allocation strategies. Second, use dividend reinvestment plans (DRPs) to offer share instead of cash, conserve funds for expansions, maintain investor confidence. Next, example how Maybank balances growth and dividends. Maybank takes a balanced approach to managing both corporate growth and shareholders' returns. Number one, robust capital reserves. CET1 capital ratios of 15.67% in 2022 above B&M standards provide a buffer for expansion and risk management. Second, sustain profitability. Net income of 8.10 billion ringgit Malaysia in 2021 and 8.23 billion ringgit Malaysia in 2022 ensures operational efficiency and consistent dividends. Third, implementation of DRB. Shareholders receive dividends as shares in 2021. 85.7 shows reinvestment boosting funds for growth. Lastly, commitment to dividends maintain 58 cents per share in 2021 and 2022. Payout ratios of 84.5% and 84.6% show strong return to shareholders. Next, how Maybank structure its capital and dividend policy to achieve this balance. Maybank balances expansion and shareholders' returns through structure policies. First, capital optimization and diversify funding uses instruments like samurai bonds and USD commercial papers. Adjusted capital mix of overseas units for flexibility and global investment. Second, effective cost and risk management. Controls interest expenses even in rising rate environments. Adjust financing mix and liability structure to maintain profitability. Third, strategic reinvestments of earnings for future growth. Reinvested 1.26 billion ringgit Malaysia in 2021. Focus on digital transformations and workforce development. Builds long-term growth and innovations. Lastly, conclusion. Maybank effectively balances long-term growth with consistent shareholder returns. Strong CET1 capital ratio ensures regulatory compliance and financial resilience. Reinvestment in digital transformations and human capital supports future growth. High and stable dividend payouts supported by DRB conserve capital demonstrates a strategy that builds a investor trust and operational strength. Shows importance of aligning capital management with market needs and stakeholder expectations. Thank you, doctor, for pay attention for our video presentations.